Welcome to RBI Policy Meet Bond Bytes special video from INR Bonds. I am Nikhil. MPC committee, that is Monetary Policy Committee, unanimously agreed to hike interest rates by 50 basis points, taking the repo rate to 5.4% compared to the pre-pandemic level of 5.15%. The market expectations were 35 basis point rate hike. However, at INR Bonds, we said that steeper the rate hike, that would fix many issues for the RBI. The 50 basis point rate hike is higher compared to the market, given that MPC committee would have taken into account of the higher capital outflows, the deficit levels, and as well as the INR volatility. Is it enough? That's the question. So before go to the bond byte details, I would request you to check out our curated list of bonds, which we curated after the RBI policy meet, which would help the investor to tackle the higher inflation rate and as well as the rising interest rate hike cycle as well. The Quick Invest app is available on both iOS and Play Store. Do download them now.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Coming back to the bond bytes, after the policy meet, as we speak, the bond yields, the Gsec yields are higher, trading at 7.28 levels, compared to the yesterday closing of 7.15, and Gsec yields are at 7.28, and Sensex and Nifty are trading higher, and INR is flat. In the policy meet, RBI governor stated that the RBI would step in a two-way operations to maintain adequate liquidity in the market through variable repo rate and variable reverse repo rate operations. The liquidity in the market fell from 6.7 trillion rupees to 3.5 trillion rupees after the two rate hikes previously, which started in May. So currently, they also said that the INR depreciation was mainly due to the strong appreciation of dollar, not because of the domestic macroeconomic indicators. And this 50 bips rate hike will leave room RBI for another round of 50 basis rate hike in the coming policy meeting. Given that they have not really went for a full 100 basis point rate hike, as the terminal rate, the OAS yields were showing 6%. The 50 bips rate hike would not solve all the issues of the RBI. The Gsec yields will tend to move higher on the back of higher government borrowing, and INR would fall given that dollar appreciating faster, and as well as the deficit is rising due to the higher commodity prices. Thank you for listening in, and do subscribe to our YouTube channel if you have not done so already.